the most profitable business of the future will not be linear. In fact, circularity is considered one of the best business model innovations of the last decade. Circular systems are not just good for the planet, they also unlock hidden operational efficiencies that drive better margins and more resilient business models. But can circularity really deliver on both carbon reduction and financial performance? Or is it still just a nice to have? To discuss this topic, today I'm joined by Nic Gorini, managing partner at Spin Ventures, where he's leading investment that drives a circular and regenerative economy in the consumer and retail space. You are listening or watching to Vestiaire 2, the climate investing podcast that helps you become a smarter impact investor and a better climate tech entrepreneur. And before we start, please don't forget to give us a 5-star review and a follow on Apple Podcasts and Spotify, and to also like, comment, and subscribe if you are watching on YouTube. This really helps the podcast, so please take 1 second to do it, and let's dive in. Today's topic is about circularity, and I guess maybe to start, simple definition. What is circularity? What does that mean?
I think it's great to start with definition. There's a lot of confusion out there, and I think words like circularity mean different things to different individuals. And I guess our definition of circularity is one where economic systems operate on a base of efficiency. And I think that the best circular system is nature. There's nothing that gets wasted in nature. Everything is a resource in nature. The system is designed to be the most efficient. And so if we look at sectors, in the consumer and retail sectors, for example, we look at $500 billion estimated inefficiencies. And that is the way we extract resources from nature, the way we transform those resources in materials, the way we transform those materials into products, the way we overproduce products, the way we shift products out in, sort of like a commercially inadequate antique business models, and the way that we then discard those resources and products in different ways. So all of that is just an inefficient system. It's economically inefficient, it's financially inefficient, is environmentally inefficient. Our definition of circularity is where resource, operational, market efficiency aligns to allow for, sort of like a lesser environmental impact.
It's interesting because we are like 2 minutes into this podcast and I'm already convinced that circularity is a good thing. So you're probably doing a good job. But something you shared with me before this episode is about somehow of a formula that you use, which is less carbon, more profit. What does it mean in practice? Do you have any example of companies? How does that work actually?
Because of the definition, we give, which is, being more efficient systems. When we have those circular system in place, we are looking at more efficient systems, therefore more profitable systems with lesser impact to nature. So less, lower greenhouse gas emissions, lower carbon emissions, if not carbon negative cycles. And so the phrase less carbon, more profit, it sort of like refers to, the number of waste to value models that we are now emerging. And again, we were just like at Summit now. I was very happy to see, those words coming to life. There was a company, I think SC02, they maximize value extraction from agri-waste, and then just beneath them there was Nanoloom, and they take waste and then they create graphene. And so again, to see those two companies, one close to the other, for me was just exceptionally exciting. But yeah, when we start looking at agri waste as an agri resource, and then we start extracting protein, and from those protein we extract fibers, that is a much viable model that is more profitable and creates less carbon.
And I guess maybe a tough question for you right now, but a lot of the models that we see in circularity rely on waste from other companies or things that are being wasted to be used as an input into another business, right? So if everything goes well, will you be out of a job in 20 years?
No, if everything goes well, I'd be happy, because it means that we will have we will have grown those systems to perfection. And but we specifically, we are looking and investing and growing and enabling all those technologies, whether it's like sort of like a biotech or a deep tech, or what it's material or down the value chain, that enable that transition. So I would probably be the happiest person on the planet. And it's if a company start looking at their product as asset, then they should be, they could be the one that actually maximize that asset efficiency. And the concept of waste is one that is inefficient itself. I mean, company that defines themselves waste management will be out of a job. So going back on the theme of less carbon, more profit, it's, we did the example of material, but we can do the same example on a table. If we look at a company like Norm in the north, they're proving that today it is possible to produce less table and be more profitable than those who produce more table. It's not a matter of quantity; it's a matter of efficiency, market efficiency, and so uh, I don't think anyone would be out of a job. I think our view is that circularity is progress, and progress drive, competition, and somebody will be ahead and somebody be behind.
So if we think about circularity, I think there are three main elements to it. For me, it's like environmental, operational, and financial. If we take it step by step, what are the actions that you can take in order to improve on all of those pillars?
This is very personal, but I think I'm quite allergic to sort of having a generalization. And I think so. I would always try to make it extremely specific, because circularity is not a goal. Circularity is a mean to an end. So I don't believe that talking about circularity in abstract help. I thought looking at a specific business, brand, or sector, could allow the conversations on how certain technologies allow them to become circular, and therefore create that kind of economic, operational, and financial efficiency. Now, I could, again, just randomly, I could take a pair of headphones, and there's a little company in UK. We're not an investor, but it's a good company. It's called Kibu, and they, I think they've designed by Batchworks. We did a little investment in Batchworks, and it's a pair of headphones designed cleverly with recycle PLA and recycle materials, and it's just been designed with a view to maximize, not only longevity, but also, repairing, reuse, and personalization. And it is just a smarter product. It's just a product that's been, thought in a way that is smarter, with materials that are commonly available, and then out of that, because it's been thought and designed in a way that it's smarter than others, it does allow for return. It does allow for a reverse vending and reverse logistic infrastructure, so those headphones can return back, and the material can be, either repaired or reused for other uses. And again, so such company, they don't need to produce 100,000 pair of headphones and push them out to a long chain, and they're just producing on an order basis. And so if Johnny wants a pair of like pink, blue, and yellow headphones, he just order them, and then they get produced. And then if Sarah wants, a dark green and black headphones, she just get order her, and they get produced. And and all those material stream, they all come from waste streams. So we tend to look at these cases in isolation because, again, it just an headphones example came to mind. If we were to do an example for shoes or for toys, it'd be a different example. But in a way, in what I'm saying, there's value, because like there's personalization, there's customizations, there's on demand, there's kind of like additive and distributed manufacturing. So one could order headphones in New Zealand. They're not going to be shipped from London. They're just going to be printed in a close by 3D printing shop. And so we can't really think about material in isolation. We can't just think, oh, there's this material, there's PLA, there's a company in Israel that's doing 3D printing filament out of agri-waste. Great. No, it doesn't work. To do something like this, you need to put like 20, 30 companies together.
And does that increase the price of a headphone in that case?
No, that's the beauty, because in this case, you're specifically working on a direct-to-consumer model, and you are operating on a demand custom build model. So they only produce what is needed, and because of the distributed and additive manufacturing model, they only produce what is required when is required, without human input, and so it becomes a cheaper product, which is more profitable, and a personalized product. So again, it's I'm just making one example. I'm not an expert on. I can't speak about the quality of the audio and the performance of the headphones. But it's just an example. I've got you in front of me with two big headphones, so that came to mind. But every product, I'd like to think that virtually for every product, there's a circular alternative that is just smarter. We are, our brain is sort of like, bear in mind, we receive between 3,000 and 4,000 innovators every year. So we've seen nappy as a service, we've seen tampon as a service, we've seen boot shoes as a service, we've seen t-shirt as a service. There's a Norway company is just doing a reverse logistic platform for t-shirts only. We see all these amazing innovators, and they start as a niche, and then you just see them growing, and you go, wow, that's super smart,
So it's interesting because I feel like when we talk about building this model, it's really a product and system design that you have to put in place. Like it's just being smart about how you create the product, how you maximize the profit from day one. I think about this company, right? Like if you produce on a per order basis, which it means that you don't have to invest so much capital in producing the first 1,000 or 10,000 headphones. You just produce as you go. So all of a sudden, your business looks very different, right? But maybe something interesting for me, as you said, you see about 4,000, 3,000, 4,000 companies per year. How do you filter through? What are the criteria you use to actually get down to maybe 10 investment per year?
So we, primarily looking at business to business solution, and they need to be at a certain stage of growth, which we just say, as long as your product service is on the market and you have 2 contracts, one perhaps is not your uncle, so you start generating revenues, and then you have your product there. So there's of course there's stage filter, there's sectors filters, there's our thesis about enabling circularity, but the real question is this technology enabling both operational and or market efficiency and creating environmental efficiencies? And if the answer is yes, then we go further. If the answer is no, it's an XYZ alternative to that, and it doesn't perform better, it costs more, and by the way, it just has a stronger environmental appeal, then sorry, it's not for us. It's not for us because it's not going to be for the market. Whereas because there are out there, again, Material being one, SAS being other, phenomenal company that comes to market with solutions that offer cost parity, performance parity, and carbon negativity. So the double material aspects is really where we kind of like separate.
Interesting. So that's really, if that's, if I were to remember one advice for a founder that wants to build a circular model, it's a model where it drives market efficiencies for you, right? Like that would be your main advice.
I think we could do like a matrix. I mean, we do spend a lot of time doing these matrices because we do have a chain investment. So we look at resource, material, fiber to fiber technologies. We look at also data to enable that. We look at downstream innovation, and then we look at reverse vending, reverse logistics. But even if we were to take a like a downstream, like a retail innovation. Let's just take someone like buy rotation. Okay, so buy rotation is kind of like what they're doing is they're renting people wardrobe. Okay, so it's like an Airbnb for our wardrobe. Okay, now that's super smart because all of a sudden you are enabling someone wardrobe to become more efficient, because again, that's a market efficiencies, because you don't need to buy, if you want to use like a Valentino bag for one evening because you're all dressed in pink, then rent it. And some products you don't need to purchase, you can just rent them. And that creates an efficient distributions of of supply and demand, and also it rewards those who have the bag. But so goes also for repairing. Again, if you look at what the SIM is doing, they are allowing people to repair the products and connecting seamstresses and repairers and all the individuals with people who owns products. And typically we would say the price for repair was, the limits of repair was like at £75. This is decreasing. So now people think that products worth £50 is worth repairing. And then there's all the emotional attachment. But again, it is about, creating technologies that enable those efficiency, either at, in the supply chain or in the value chain. But always environmental efficiencies with operational efficiencies, with market efficiencies, they're combined.
Going back to what you said, I think this example is quite interesting because it's, as you said, transforming a product into an asset. So you have a bag, it's in your wardrobe, becomes an asset, and basically you make money from it. So that's the beauty of it, which is like, before that, your wardrobe is just like a liability. You bought some stuff, it's sitting there, you're using it from time to time, and that's it. In this example, you're taking a wardrobe and you're making a potential profit out of it for the person that's renting the bag. And on the other side, less capital to be invested in a bag that costs how many thousands of euros, and just rent it for one night. So I think it's also about this financial efficiency. So I love this example. I think it's quite interesting. But if we continue on that example, maybe the thing from a consumer point of view is that how do you encourage people to actually, go through that journey? Because not everyone is willing to rent a bag, for example. Like, it's in terms of the mindset, right?
I've heard so many times, where consumers are not ready, there's no demand. Bullshit. There's Vinted and others are the proof that there is demand. There's always going to be demand for more efficient solutions. It really depends how we look at them. I mean, would you say Elon Musk is a circular entrepreneur? No, nobody would. But what he's been doing is actually taking rocket back and use them again. And now, again, I'm oversimplifying here, but that is just what he's been doing. So, the similar principles apply. Like there's a system isn't efficient, is designed like 100 years ago, 50 years ago. He's taking that systems and like look at, okay, what's the point of paying? We spend a year and a half and different billions of dollars building a rocket that then explodes and get left in the space. Great. Is there a way I could get that rocket back? Yes. And then once you get those rockets back, then you have a most profitable business. So similarly, we don't need to force consumers any change of behavior. What's happening is already happening. It's not in the hand of the brand. So I think there's an advantage here. There's an opportunity for corporations. Again, think about watches, tables, chairs. How big do you think is the secondary market of antique furniture?
No idea.
Exactly. How big do you think is the secondary market for watch or ownership?
No clue.
Okay, so do so for consumers, I think the minute that we could offer consumers the chance to buy, again, I'm not talking about the Rolex, but we could talk about Rolex. In fact, Rolex has been one of the first to start putting products on blockchain to fight counterfeit models and to own the secondary market to offer renew and repair and certify as an extended product's life. But to the consumer, it just come as, hey Hugo, would you like to buy, a GMT2 from someone, or would you like to buy from Rolex with a warranty and the next 20 years of, authorized service from someone you can trust? So to the consumer is value. Now, value has 8 billion interpretation. So if we look at, I love what Decathlon is doing. Decathlon is diversifying the propositions. Do you want to go away for the weekend? Do you want to buy a tent? Go ahead, buy a tent. Make it pink. Do you want to rent a tent for a weekend? Here we go. Here's a tent option. Do you want to buy a second-hand tent? Here's your pre-loved tent. So do you want to buy like a semi-destroyed tent? Here's the semi-destroyed tent. And do you want to bring us back your semi-destroyed tent and we make a bag out of it and then we make something out of it? Go ahead. So consumers today are segmented by the choice they're making. They're buying a product new, paying 100% of their price. They're buying it secondhand, paying maybe 40, 50%, or they're waiting for the most discounted warehouse sales, paying maybe 60, 70% discount. So this model already exists. Is just some corporations are adopting this model sooner than others.
For sure. And I think it's interesting when you think about startups because, as you said, like there is quite a few, even though I'm not an expert in the sector, but like Vinted being one of them, back market in France, huge unicorn, super successful, just reselling iPhones and computers. And it just makes a lot of sense because a lot of people don't have access to iPhones if they are not recycled or reused because they're just too expensive anyway. So I think it's a perfect example. Talking about circularity from an investment point of view, do you think traditional VCs are doing well in the sector? What's your take on other people? Not naming anyone, but like, do you think it's understood well enough by other investors?
If we talk about circular economy in principles, of course, it's not easy to grasp. If we talk about high performing biotech waste to value model that are generating XYZ increase in performance and price, and then these are fast growing, exciting biotech. So it really depends what you call what. There are, however, some other funds out there, and they're growing. Happy to say, with 100% focus on circularity, whether it's in food and agri, or whether it's in the consumer and retail sectors, or whether it's a combination of. They are out there. They're growing. I mean, we can count them on like two hands, maybe. But some of the investments that we're doing, are also exciting opportunities for generic investment. I mean, the way we are reframing our thesis, it's about efficiency, because it's something that a climate tech investors understand, an impact investor understand, a generic investor understands, and I don't think I think it's about entrepreneur selling what they're doing in a way that could be easily understood by everyone, and it's our responsibility, if we set up to if we have a theory of change that implicates circularity, to turn that into a language that 8 billion people understand and appreciate.
Makes a lot of sense. I guess one quick section before we get towards the end of this episode, but you mentioned biotech, deep tech. It's probably not the place that most people expect to look at when they talk about circularity, although now you call it efficiency. But what's your take there? Like, what's going to happen in the future? What's happening right now, actually?
So I think we're going to see some of the most exciting change in the consumer and retail sectors, particularly, but also in others. When we look at, so there's two components. So let's just look at the use of data. If you take a brand, like pick a commercial brands that you know, like could be your Nike, Adidas, Lululemon, Ralph Lauren, just a commercial retail brands. Now these products, once they start having, you know, digital product passports integrated in their value chain, corporations will start having numbers of data that are unseen. I mean, these companies create 200-300 million units a year. So for a company to be able to have access to 200 million data points at once and create potentially direct engagement to consumers, that is unseen. And so that's where, you know, sort of like, you know, artificial intelligence, deep computational power come in and sort of like make sense of those data in a way that can help, you know, brands to, again, better segment their customers, understand correlations, and again, decrease their manufacturing levels and just, again, produce better, sell better, design better. And so there's a whole new set of data that are now coming that did not exist before. And in order to process those data, we'll need some new technologies. That's what's happening on one side. On the other side, again, new technologies allow to create, you know, to extract proteins and create new materials from sources that were not considered before. And you know, there's new way to recycle and reuse fibers, and there's new way to create fibers. And so I think if we realize that we can extract, you know, if we can look at agri waste as a resource and we can extract fibers from there, then that's where, you know, kind of like biotechnologies come into play. And it is, again, the goal is not circularity. Circularity is just a way that can enhance the efficiency in terms of extracting resources. Because if we, you know, we don't need to create and extract, you know, from nature if we can maximize nature efficiencies.
I think it's very interesting because I think it means that you will probably invest across many different sectors, given that efficiency is everywhere to be found. I guess one last section for you today. It's called the fire questions. It's a rapid round of questions where you have 1 sentence maximum to answer. Are you ready for that?
Yep.
Let's do it. So what's one of the most overhyped trend in climate?
Carbon capture technologies that apply to certain materials that we never look. That I think it would be a long time to look markets. You know, if you look at some, you know, some applications that have enormous potential, but there's little or no demand.
Interesting. What's the most underappreciated circular innovation?
I think the advantage of waste to value model, and then the less sexy would be reverse vending, reverse logistics systems.
Interesting. What's one founder trait that you always look for, like a quality in a founder?
Genuine, no bullshit.
If you had 100 million to deploy tomorrow, where would that go?
I think it'd probably be like 40% in material science, a big 20% in 20-30% in sort of like deep tech solutions to enable data throughout the supply and value chains. And then there's some phenomenal new business models, circular business models that are just, you know, changing the way we consume, use, maximize the value of products.
What's the best innovation you've ever seen in climate?
I think distributed additive manufacturing is the one with the highest potential. Unfortunately, is the one with the lowest demand yet.
What are the 3 most important things to be a successful impact VC or climate VC?
I think the first is to have a very strong vision and a theory of change, one that is, yours, unique, and one that sort of like aligns, sort of like your LP, your partners, your startups. So I think that's, for me, is the fundamental. So theory of change, vision, alignment. The second is, of course, being in the market. And I think, event like Hack Summit, experience like this, knowing the market, getting to know the market, getting to know the founders from universities to out of uni to like growth, it's extremely relevant. And the third bit, I have to do a little bit of self-promo, is to create an environment that really drive value beyond investment. It is an early stage sectors, it is a nascent sectors. Investing is not sufficient. It is required to integrate, aggregate technologies and make sure that adoption and demand increase by way of demonstrating success. And that we're doing, we call it the House of Circularity, but it's our platform to kind of like drive that value.
For sure, and I'll put the link in the description of this episode. And one last question for you today. Who's the next person that should be in your seat for an interview?
I have to say, I think I always shout out for Regeneration VC. I think they are, I love them. I think they're a great inspiration. Michael and all the team, I think they're doing a phenomenal job. I think they really brought regenerative model to consumers. I think they are most inspiring. There are others. I love to quote them. I think they're doing a phenomenal job. Like people like, the European Circular Bioeconomy Fund. I met them, pretty much all of them, in the last week. People like Archipelago in London, Volta Circle. There are some phenomenal closed loop partners, Circularity Capital. I can name 10 by heart investors that are really being, they're really taking the risk and really driving sort of this model forward.
Great. And the most important question of them all, where can people find you, online or in person, if they want to reach out?
We're very open. We've created the House of Circularity as a way to more efficiently engage with everyone. We don't believe much in sending, receiving thousands of emails and having like the 15 seconds pitch. I think that transactional relationship doesn't work for us. We've created a house to invite innovators, startups, other investors to get to know the founders. And get to know the founders means spending time 2, 3, 6 months doing pilots, offering pilots, looking at how they collaborate. Do they want to integrate with other companies? So that's really a way to introduce ourselves, get to know from founders. And so we've invested into that sort of like platform. It's it's invitation only, and we don't take it's not a commercial entity, so it's not a profit center for us. We've done investments. The team is building a super nice structure with a little bit of AI to create better connections. But that's our way to get to know founders, bring them together, and drive pilots and create a bit of value.
I love that. Well, Nic, thank you so much for your time today. It was such a pleasure. I think if I summarize this episode, and the key takeaway for me is to look at startups that have market efficiencies and financial efficiencies baked into the model from day one, as opposed to look at circularity as a goal. It's more a mean to an end, and to make more profitable businesses and also more environmentally friendly companies. So thank you so much for taking the time. It was a pleasure. And listeners, if you like this episode and if you like the show, don't forget to like, comment and subscribe if you're on YouTube, or give us a follow and a 5-star review on Apple Podcasts and Spotify. It really helps the podcast, so please do it. And thank you so much, Nic. It was a pleasure.
Thank you, Hugo.